Hi everyone, today I'm doing my free stocks to buy June 2020 edition, and this is like the most popular video I do on the channel, and this is where I talk about free stocks that I'm looking to buy in the month of June. And today I've got a good selection of choices. I've got one stock that is kind of on a bit of a dive at the moment, one dividend stock and also one growth stock. Now before I get onto this, I am going to say I'm not going to be buying too heavy because of the stock market being up so much and what I believe is to be a bit of a pullback at least some point soon. So I am staying quite cash heavy, but these are three companies that I will be looking at buying if the opportunity is right. So number one is Boeing. It's a company that I own. It's a company that I've been buying quite heavy since it started going under $120, and especially when it got to $90, I was like loading the boat. I was buying a lot of shares. So I got quite a decent average in price on this stock. It's a stock that I wouldn't mind adding again if the price is right. I would say right now it is a little bit too high for me, but if there was about a 10% pullback in this stock, it could be one that I do add into a little bit more. Now obviously when we look at the chart on Boeing, it is a very horrible picture. Obviously it had the Max 8 crisis, which actually really did not affect the company. It wasn't until we got the coronavirus and the amount of flights declining that there was a lot of orders, and that affected Boeing, and they went down absolutely huge, as well as topped with the issues they had before the Max 8. Now because of the decline in orders, it means that Boeing has had a few problems, and the worry is that because there's not going to be as many people travelling, them airline companies aren't going to need their aeroplanes, and it's really affected Boeing. Now my first positive with this company is that I don't believe it will go bankrupt because of the amount of loans it'll be able to get, the amount of cash that we've already seen it raise, and if it needed government aid, I'm sure that the government will try and bail Boeing out because of the military planes that they get for them, and also the amount of impacts that it does have on the US economy. So I think from that point of view that Boeing is a safe company, even with a lot of pressure that it does have right now and with the cash that it might need. Now another benefit for Boeing is it only has one competitor. Now the airline industry is down and Boeing's down, but the difference is that all them airline companies are battling away to try and get passengers from A to B. When you're in Boeing's position, you've only got one competitor. It's a massive advantage, because let's say that eventually airlines get back to where they were, maybe in 2 years time, 3 years time, then eventually a lot of these planes are going to need upcycling because they're aging, or airline companies will need more planes. So I think that from Boeing's point of view, it's something that will recover in 2 to 3 years time. And the advantage is if everyone did go to Airbus because of your reputation being damaged from everything like this, Airbus would end up with a backlog of 6-7 years, and at some point some of these airplane companies are going to go, you know what, Boeing might not have as good reputation, but we ain't waiting 6 or 7 years to go get our plane. We'll hop over to Boeing, which will only take 3 or 4 years. Airplane companies will look to do that. So I think even though the reputation has been damaged, when the actual recovery of the airline space does happen, Boeing will be in a really good position to start taking them orders back on because of it only having one major competitor, which you can't say much for in like every other industry. Like normally in the passenger planes, only having one competitor is huge. But when you look at other industries, there's normally 3, 4, 5, even 6, maybe more competitors in this industry. So to only have one competitor is a huge advantage. And obviously if the airplane contracts are slowing down a little bit for passenger planes, it does have its military side, so that should still support Boeing. So also having the military play is a very safe bet as well with Boeing. And with all that, the orders will return, and then Boeing will be able to create profit. Its CPS will start to recover, revenue will start to recover, it'll pay back some of these loans, and then eventually it'll get back to a dividend. So it isn't an easy ride for Boeing. There is risk to reward here, but if you can hold this for 2 to 5 years at these sort of prices, I expect Boeing to at least go up 100%. But to be honest with you, I'm kind of looking to hold this for more of a 5-year spectrum, and on my return I expect to get at least 200-300%. So with Boeing, it's a nice easy hold, and like I say, anything around below 120 for me is something really tempting to pick up. So Boeing is one that I'll add if it's at the right prices, and it's a stock that I'm willing to hold for a very long time. Number 2 is Altria, which is a dividend stock that I hold, and it's a company that I really like, and probably on this list right now, it's the one stock at the prices it's at that I actually would not mind buying. So I'm actually probably going to pick up some Altria next week because of the prices it's at. It's currently around about $37, and previously like my averaging price was $43. So it's actually below my averaging price right now, which kind of attracts me. Now this stock is down huge for a variety of reasons, one of the reasons being Juul, which we'll talk about in a little bit. Now obviously what attracts me to this stock is that dividend. It's an 8% dividend, and it's a stock that's carried on paying that dividend for a while. And as well as collecting that dividend, I also believe that this stock is slightly undervalued on the share price front. I believe this stock should be trading somewhere around about a $60 stock, which offers a lot of upside on that stock price as well as collecting that dividend as well. Now, Altria has a really diverse portfolio, which is credit to the management team. Altria was always known as a cigarette brand. And obviously one of the big things with cigarettes right now is that it's kind of getting more publicised how unhealthy it is, and there's kind of less smokers out there. At the same time, I believe that smoking will always exist. I believe that it's an essential, and people who smoke always want to smoke, and it's, you know, it's one of those things that you can kind of get addicted in, and it's classed as essential by people that do smoke. So it's a very safe industry, because even in a recession, people are still going to need to smoke. So from the smoker side, that's really good, but Altria had to counter the kind of decline in smokers. So what it's done is it's invested in an e-cigarette company, which is called Juul, which is its kind of diversification, because a few people are moving from smoking to e-cigarettes. Now there has been a few negative press with Juul saying that it does cause a few health problems from the vaping. At the moment, from what I know, it's only caused by some of the flavours which aren't Juul flavours. So from Juul's point of view, it should be okay, and I think it'll get everything resolved. And like I said, then it covers the cigarette side and also the vaping side. It's also made an investment into Bud. Obviously Budweiser, a massive beer brand, with also some other brands right there. So it's got a little bit of a diversification in the beverage space now, and also it's bought a little bit of a percentage into a marijuana company called Kronos Group. Some of you guys probably have heard of that one. So it also owns a percentage in there, so it also plays that kind of weed side, that if it gets legalized in a lot more states, a lot more countries, obviously healthcare as well, it's also got that side as well. So it's kind of got four little income streams right now. So management have done a very good job with the kind of income side of it, and it'll carry on having a little bit of a decent profit increase, a little bit of a decent revenue increase, and with that it'll also be able to carry on paying that dividend. It doesn't like to hold a lot of cash, because with the industry that it's in, it's vulnerable to a lot of fines, and it doesn't want heavy fines. So if you're a company that holds little cash and go, look, you can't fine us that much because we'll go bankrupt, it's a great idea from Altria. Altria managed the cash really well without having the balance sheet get too ugly, and with that little increase in revenue, with some of the growth sectors it's in, the EPS front, it should carry on paying this dividend, and it's a nice dividend. And like I say, I think the share price is a little bit undervalued as well. So I'm really liking this company, and like I say, it's probably one that I had a few shares into next week. And number 3 is Alibaba, a company that I've talked about quite a bit on the channel recently, and I'm not actually going to buy it at these sort of prices it's at right now. I'm kind of mentioning this stock because I believe that if there's a lot of China pressure, a lot of this like delisting pressure, which I don't think it will get delisted, because I think Alibaba is a legitimate company, but what might happen is it might build some fear around some investors, and few of them might see this delisting and kind of back out of the stock. And I'm kind of gambling on them having that fear and pulling out the stock, and if they do, then that'll create a good opportunity for me to buy Alibaba. I really like Alibaba under $180, which is about 10% from where it is right now. So if the stock was to go down 10%, it's a stock that I would definitely start buying a lot more of again. I really like this company. With Alibaba, you get fantastic revenue growth, fantastic EPS growth. It trades at a very low PE, because like if you compare it to a very similar company like Amazon, you're paying a PE of like 80 for that. For this one, pre like coronavirus, it was about a PE of like 20, 25. So it's a really low PE. And like I say, if it does go down, I'd love to buy this one. With this, you get so many e-commerce sites. So you get like Alibaba, AliExpress, Tmall, which is a really big Chinese website over there. Like you won't believe the amount of transactions that go through that. It also has investment in the payment space. It also has a cloud play, and it also likes picking up a little bit of investments in like other little companies, like a 10% stake in loads of different ones. One that I used to have is Bilibili. There's another Chinese company that I'm looking at that has a 10% stake in. So just the portfolio that Alibaba has is fantastic. So with that, its EPS, revenue growth, its earnings were fantastic. I'm kind of watching this one right now this month, because if a little bit of fear builds up around this kind of delisting of Alibaba, it might go down, and that'll make a good opportunity. But even so, Alibaba at $200 stock, I think it's a big buy, because I think this company in the next 2 years has the potential to go up 100%. I absolutely love Alibaba, a great company, great management team, and if the opportunity comes up to buy Alibaba, I will definitely buy this one. So those are 3 stocks to buy in June 2020. I hope you guys enjoyed the video. I hope you found some information about these companies, and maybe you'll take a look at them. As always, if you can like that video, subscribe if you haven't, and I'll see you in the next one.